Hey guys, it's Carter, and today I'm coming at you with a quick video on tech stocks. The sector has been under heat recently. We've actually officially entered correction territory. Here on the NASDAQ, we've fallen over 10% since the June highs, and I've now come across numerous analysts today saying how the margins in the tech space have completely evaporated. The competition among chip stocks is getting incredibly fierce. So I just wanted to give you my technicals perspective here because today the analysts were saying that now is the time to cut your technology positions and get the hell out of tech. So are they right? Join me in this video. It should be very interesting. All right, so here we're looking at the chart. This is the IXIC NASDAQ comp trading at 24,876. We're going to slide over to the Qs. The QQQ chart is the NASDAQ tracking ETF I used to trade, and then I'm also going to show the SMH right at the end of the video. All right, so here's the Qs. This is the QQQ chart, and as you can see, I believe that the pattern we're working on right here is much more likely to be an A, B, C correction rather than the start of a new downtrend. This doesn't look like an impulse to the downside. No, this looks like a corrective move to the downside in a long established uptrend. This looks much more like a counter trend move than the start of a new downtrend. So I do believe we're actually going to find support in my key support levels between 683 and 678. We're at 675 on the Qs, so we're right at them. We're right here. We could start to bounce up and head up directly. That is a possibility here in these levels. This is a key C wave target zone right here. And as long as we're staying above 637, as long as we're staying above this major critical support pivot down here, then I am going to remain bullish on the QQQ chart for a move to much higher levels towards resistance, which would be at around the $800 level. That's my target here on the Qs. Now, we are now also seeing an oversold signal on the 8 setting RSI. This signal hasn't fired since April of this year, and you can see the type of rally we had after the signal fired. Now, I don't think we're going to have a rally of similar magnitude. However, I do believe we are going to rally, take out the highs, and probably head above the $800 target I have here on the QQQ chart. So yeah, this is much more likely just a correction, a counter trend move in a long-term uptrend to key support levels, to averages, to cool off before we see another push towards the upside and the trend continue. So now here's the SMH. This is the semiconductor ETF I used to trade, and you can see that much of the same. We're looking at a likely ABC correction to the downside here, not the start of a new downtrend, aka not the time to be getting out of your technology positions. In my opinion, we've fallen into an area of low risk rather than the area of high risk, which we were at the start of June here when we were above 600 on the SMH. We've also fallen into the key support levels here for a C wave and thrown up an oversold signal once again on the 8 setting RSI, not seen since April on this chart, and you can see it was right before we had this monster rally. So once again, I do believe we're going to see a rally to new highs here on the SMH towards the $750 resistance target I have up there. That's the level I think we're going to attack here on the SMH in the coming weeks and months. And that's provided we hold this long-term ascending support level here. If we zoom out, we can see it. This is the level I really want to see hold. It's this support that connects the pivot lows from Liberation Day, which was April of last year, and then April of this year, I believe, was right here. As long as we hold this pivot, if we come down to it, I don't believe we will, then I'm going to remain bullish on the SMH. So finally, I just want to say that it's very important to look at this SMH chart and even the NASDAQ, because the SMH chart is typically the leader, and then the NASDAQ gets the flow, and then finally the S&P 500, and then you can also use the Dow and the IWM to determine the amount of participation here in the market. So when you see the SMH continue the rally towards the upside, the SMH will surge, bulls emerge, but if the semis fade, then bears invade. And hey, in this case, when you see a pullback in a long-term uptrend, SMH chip stock correction, Carter big fat erection. Because I mean, this is just one exciting opportunity for a low risk, high reward trade that is high probability. These don't come around very often. This one looks like a good one. So keep risk management in the back of the mind. But right now, this looks like a good opportunity both in the QQQ and the SMH. All right, thank you for watching. Take care, stay safe in the markets.